Every publicly traded company produces an annual report. The document contains financial statements, management commentary, risk disclosures, and governance information. It is officially required. Analysts read it. Investors study it. The Securities and Exchange Commission reviews it, and its primary function has nothing to do with any of that. The annual report's primary function, documented in the organizational communication and institutional sociology literature since the 1970s, is legitimacy production, the systematic communication of a specific institutional identity to the multiple audiences whose continued cooperation the corporation depends on. The financial information in the annual report is the documentary evidence the corporation presents in support of the legitimacy claim it is actually making. The legitimacy claim is the primary document. The financial information is the supporting exhibit. In 1977, organizational sociologists John Meyer and Brian Rowan published Institutionalized Organizations, Formal Structure as Myth and Ceremony, the foundational paper in institutional theory. Meyer and Rowan's central finding: organizations do not produce formal documents primarily to coordinate internal activity. They produce formal documents primarily to legitimate themselves in the eyes of the external audiences whose resources, authorization, and cooperation they depend on. The annual report is the most extensively documented case study of this phenomenon in the organizational sociology literature. By the end of this video, you will know exactly what the annual report is actually communicating, to which audiences it is primarily addressed, and why the financial information it contains is the least important information for understanding what the document is designed to produce. The numbers prove the story. The story is the point. The legitimacy production function of the annual report operates through a specific communication architecture that has been documented in the organizational communication literature since the 1980s. Organizational communication researcher Cynthia Stohl and colleagues identified in their systematic analysis of annual report rhetorical structures, published across multiple studies from 1983 through 1998, that annual reports address 4 distinct legitimacy audiences simultaneously, and that the document structure is organized around the specific legitimacy claims that each audience requires. The first audience is the financial community: shareholders, analysts, and potential investors whose continued capital provision depends on their confidence in the organization's financial performance and management competence. The legitimacy claim for this audience is financial health and managerial capability, supported by the financial statements and management discussion and analysis sections. The second audience is the regulatory community, the SEC, industry regulators, and legal bodies whose continued authorization of the corporation's operating license depends on the corporation's demonstrated compliance with regulatory requirements. The legitimacy claim for this audience is regulatory compliance and governance integrity, supported by the risk factor disclosures and governance sections. The third audience is the broader public, the media, community stakeholders, and general public whose continued social license for the corporation's operations depends on the corporation's demonstrated alignment with social values. The legitimacy claim for this audience is corporate citizenship and social contribution, communicated primarily through the CEO letter and the corporate social responsibility sections that have been added to annual reports since the 1990s. The fourth audience is the internal community: employees, managers, and other internal stakeholders whose continued productive contribution depends on their identification with the corporation's mission and values. The legitimacy claim for this audience is organizational purpose and cultural coherence, communicated through the narrative sections that frame the corporation's identity and trajectory. The most extensively documented element of the annual report's legitimacy production function is the CEO letter, the personal communication from the corporation's chief executive that opens virtually every annual report, and that organizational communication researchers have documented as the primary legitimacy production vehicle in the document. Rhetorical analyst Donahue documented in her 1997 analysis of CEO letters in Fortune 500 annual reports that the CEO letter performs 5 specific legitimacy production functions, each corresponding to a specific threat to the corporation's legitimacy that the letter is designed to address. The first function is retrospective sensemaking, the reframing of past performance in ways that transform objectively poor results into evidence of strategic wisdom. Donahue documented that CEO letters consistently reframe negative financial outcomes, declining revenues, falling profits, market share losses as evidence of principled sacrifice of short-term performance for long-term value creation. The reframing does not deny the negative outcomes. It reassigns their meaning within a narrative framework that is favorable to the management team's continued authority. The second function is prospective certainty production, the communication of confidence about uncertain futures. CEO letters consistently project confidence about strategic directions, market conditions, and competitive positioning that the actual information available to management cannot support. The function is not to predict accurately, but to produce the audience's willingness to continue extending resources to the management team despite the genuine uncertainty of the future. The third function is crisis neutralization, the rhetorical management of specific events that threaten the corporation's legitimacy claim. Donahue documented specific rhetorical strategies for neutralizing regulatory investigations, product failures, major litigation, and management controversies within the CEO letters framework, converting potential legitimacy threats into evidence of management quality. The historical origins of the annual report's legitimacy production function reveal that the document was developed specifically as a legitimacy communication tool, that the financial information was added to support a pre-existing legitimacy communication tradition rather than the other way around. Business historian Thomas McCraw documented in his 1984 Profits of Regulation that the modern annual report emerged in its current form as a specific response to the progressive era regulatory environment, a period in which corporations faced significant public skepticism about their social legitimacy and regulatory challenges to their operating practices. The corporations that developed the most sophisticated annual reports in this period, railroad companies, utilities, and major industrial firms facing the most intense regulatory scrutiny, were documented by McCraw as explicitly understanding the annual report as a legitimacy communication instrument rather than as a financial disclosure requirement. The financial disclosure requirements were regulatory impositions. The narrative framework, the CEO letter, the visual design, and the stakeholder communication architecture were strategic choices made by corporations that understood they needed to produce legitimacy in multiple audiences simultaneously. The annual report was designed to produce legitimacy. The financial information was the evidence submitted in support of the legitimacy claim. Here is where the legitimacy production analysis produces a precise diagnostic for annual report evaluation. The annual report's legitimacy production architecture makes it a richer source of institutional information than its financial information alone would suggest. Once you know what information it is actually producing, wait, look at the structure again. The legitimacy threats the annual report addresses are more informative than the legitimacy claims it makes. A CEO letter that devotes significant space to explaining a regulatory investigation is communicating that the investigation represents a significant legitimacy threat, more significant than the corporation would prefer to acknowledge. An annual report that introduces a new stakeholder communication section addressing previously unaddressed social concerns is communicating a change in the corporation's assessment of the social legitimacy challenges it faces. The specific audience the annual report prioritizes in any given year is more informative than the content it provides to any audience. An annual report that significantly expands its regulatory compliance and governance sections while maintaining or reducing its financial performance narrative is communicating a shift in the corporation's assessment of its primary legitimacy vulnerability. An annual report that significantly expands its employee and culture sections is communicating a shift in the corporation's assessment of its primary internal legitimacy challenge. The gaps in the annual report's narrative are more informative than its content. The events, trends, and challenges that are absent from a CEO letter that otherwise addresses the corporation's operating environment are the events, trends, and challenges that the corporation has assessed as too legitimacy threatening to acknowledge within the legitimacy production framework. The pattern does not stop there. The most consequential contemporary development in annual report legitimacy production is the emergence of integrated reporting, the incorporation of ESG metrics, sustainability reporting, and stakeholder impact measurement into the annual report framework. The integrated report extends the legitimacy production architecture to new audiences, specifically the growing constituency of investors and stakeholders who evaluate corporations on non-financial legitimacy criteria. The integrated report is not a more comprehensive financial disclosure. It is an expansion of the legitimacy production document's audience coverage. If this investigation is worth continuing, signal it. The algorithm reads that as a vote for independent analysis. Here is the applicable lens. Reading an annual report as a financial disclosure document produces specific analytical insights. Reading it as a legitimacy production document produces different and complementary insights about what legitimacy threats the corporation is managing, which audiences it is prioritizing, and what it is choosing not to say. The diagnostic practice: when reading any annual report, identify the primary legitimacy threats the document is managing. The document's rhetorical energy. The sections that are most elaborated, most carefully crafted, most visually prominent reveals the legitimacy threats the corporation considers most consequential. The document's gaps, the events and challenges that are absent or minimized reveal the threats the corporation has assessed as too dangerous to address within the legitimacy production framework. This analysis does not replace financial analysis. It contextualizes it. The financial information in the annual report was selected, framed, and presented in the service of a legitimacy production purpose. Understanding that purpose tells you which financial information to trust, which to scrutinize, and which to supplement with sources outside the corporation's own legitimacy communication. The next video in this investigation will show you exactly how 3 specific annual reports from a major bank during the 2008 financial crisis, a technology company during a major data scandal, and a pharmaceutical company during a product liability crisis deployed the legitimacy production architecture to manage specific threats, and what the analytical gap between the document's legitimacy claims and the independent information available reveals about each corporation's actual situation. Subscribe so you are there when it publishes. The question is not whether the real function of the annual report has nothing to do with finance. Meyer and Rowan's institutional theory documentation, Donahue's CEO rhetorical analysis, and McCraw's annual report historical research all confirm that it does not. The question is which legitimacy claim the next annual report you read is primarily designed to produce, and whether the financial information it contains is evidence supporting that claim or evidence that complicates it. This investigation was produced with AI-assisted research tools and human editorial oversight. All claims are grounded in documented historical and institutional sources. Transparency is part of the methodology.